Hello everyone. Today we are going to start the problem part of this bill of exchange. In the last class we have discussed what is bill of exchange and what is promissory note, what are the differences between promissory note and bill of exchange, who are the parties of the bill of exchange, promissory note, and some other short terms like discounting of bill, then maturity, days of grace, etc. we have studied in the last class. So those who have not seen those theory classes, please refer that video. Then you will have an awareness about what is bill of exchange, how we have to account it. Now today we are going to discuss what are the journal entries related to accounting of bill of exchange. When a bill of exchange is drawn and accepted by the purchaser or the drawing, this bill can be treated in 4 different ways. That means this bill can be maintained into 4 different ways. First one, it can be retained by the drawer till the maturity of the bill. That means till the date of maturity of the bill may be kept with the drawer itself. Drawer means the person who write the bill. That means the creditor who sell the goods on credit. He will retain the goods till maturity. Another one is that this bill can be sent for collection before maturity. That means few days before the maturity. That means he will assign his banker to collect the bill amount. Instead of him to collect the bill, instead of he himself goes and collect the bill, he will give that bill to his bank for collecting the money from the drawing. That is called bill sent for collection. Bill will be sent to any of his bank for collecting the money. And the third one, the same bill can be discounted with the banker. That last class we have discussed what is bill discounted. That means suppose this bill may be drawn for 6 months, but the drawer is in need of urgent money, or he is in urgent need of money. He cannot wait till 6 months to get the money. So what he will do? He will discount the check which he has with the bank. Suppose if the bill amount is 50,000, he can discount the bill on the same day when it is drawn. He can submit this to any of the banker, and bank will give the money after deducting a nominal amount. For 50,000, the bank may deduct 1,000 rupees and will give 49,000 rupees. So the amount deducted by the bank for discounting of the bill is called the discount amount. And after deducting the discount, the remaining money will be given to the drawer. And at the end of at the maturity period, bank will collect the money from drawer. Isn't it? So that is the third case. And the fourth case, the bill may be endorsed in favor of his creditor. The drawer may endorse his bill in favor of the creditor. Suppose this 50,000 bill is there with the drawer. At the same time, drawer has to pay 50,000 rupees to another person. So what the drawer can do? Drawer will say that instead of giving money, you keep this bill. So after 6 months, you can collect the money from my customer. Okay. So like that, the bill can be endorsed. Endorsed means transferring. Okay, sir, transferring the bill to his creditor. So creditor can collect the money from the drawer. So like that, 4 different ways are there. Today we are going to discuss the journal entries in these 4 different cases. Okay. So journal entries for bill of exchange. First case, when the bill is retained by the drawer till maturity. When the bill is retained by the drawer till maturity. So what will be the journal entries? What are the journal entries in the books of both the drawer and drawing? When the bill is retained by the drawer till maturity, that means till the due date of the bill will be kept with the drawer himself. He will not send the check for collection. He will not discount the bill. He is not endorsing the bill to the creditor. He is keeping the bill himself. So what will be the journal entries in the books of drawer and in the books of drawing? In the books of drawer means seller, or we can say that creditor. Drawing means buyer, or he is the debtor. Okay. So what are the journal entries? So first transaction we can write here. First one, on sale or purchase of goods on credit. That means when the drawer sells the goods on credit, or when the buyer buys goods or debtor buys goods on credit. What will be the journal entry? That is a normal journal entry we have studied. So we know that what is the journal entry for credit sales. What is the journal entry? We will write the customer's name. See, we can write here debtors. Debtor to sales. Debtor to sales. Okay. Suppose if he has sold goods for rupees 10,000, what we will write? Debtor to sales 10,000. Suppose if the debtor is Y, we will write Y's account debtor to sales. Then what will be the journal entry in the books of drawing? In drawing's book, what he will write? He purchased the goods on credit. He purchased the goods on credit from whom? From his creditor. So what will be the journal entry? Purchase debtor to creditor. Isn't it? This is the normal basic journal entry that we have studied in previous chapters. Okay. So this is regarding sale of goods. Now we are going to enter the journal entries related to bill of exchange. That is on drawing or accepting bills receivable, or we can write bill of exchange. So we have told that for 10,000 rupees it is sold. For that 10,000 rupees, who has made a bill? Drawer made a bill. And that will be accepted by whom? Drawing. So what will be the journal entry? Yes, for the drawer, he has written a bill that is called the bills receivable. Bills receivable. debtor. What do you mean by bills receivable? He has to receive money against that bill. That is what it says. Who has to receive? The maker or the seller or the creditor has to receive money against the bill. So bills receivable is his asset. So bills receivable, debtor. From whom he has to get? From the debtor, isn't it? From this person to debtor. Okay. So that is the journal entry when we draw a bill. And when it accepts, who will accept? Accepting means signing on the face or back of the negotiable instrument is called acceptance. So bill, if he accepts, that means drawer will draw the bill and drawee will accept it. Accept the bill means accepting the payment. Okay. So for him, this bill is a liability. Bill is a liability. That means the money against that bill is to be paid. Paid to whom? To the creditor. Now, to the creditor he has to pay money. So, when he has to pay the money, this will be transferred to bills payable account. So, we will write here, creditors will decrease. So, creditors, debtor to bills payable. Bills payable means he has to pay against the bill. So what is the situation here? Creditors, in the first January, creditors created. An amount of creditors is created, liability is created. And that liability now reduced and created another liability. Okay, that creditors reduced and created another liability. That is what the journal says. Okay, so since the liability reduced, it is debited, and another liability created, that's why it is credited. So bill is accepted. Okay, now what is the journal entry? At last, that means on maturity he will receive the money, isn't it? So we can write collection of the bill. That means on collection of the bill amount, on maturity date, if it is for 3 months, on the third month, on that particular day, he will receive the money. So what will be the journal entry? He can write, he will get the cash. So he can write, creditors can write either cash or bank, debtor. Bank or cash debtor. That means money can be written in his cash account or his bank account. And which asset decreases? This asset will decrease. That this asset will cancel. So this is to be cancelled. So to bills receivable. Okay. Then, so cash or bank debtor to bills receivable. Here what happens? He is paying the money. He is paying the money. That means credit what goes out. So what he will write here? To cash or bank. So how it is gone? Because this liability is settled. So this liability is cancelled. So we can write bills payable, debtor to cash or bank. Bills payable, debtor to cash or bank. So these are the journal entries when the bill is retained by the drawer till maturity. Okay. Now let us discuss the second point. When the bill is sent to bank for collection before maturity. Second method, bill sent for collection before maturity. That means we have told before maturity he may appoint his banker to collect the bill. So this bill will be sent to the banker for maturity, that for collection before maturity. So in that case, this journal entry is there, that has no issues because same entry should be there and bill is accepted. These two journal entries are same. And the difference is there in the third journal entry. This third journal entry will be changed. Now he sent the bill for collection. So that can be the translation here. Sending the bill for collection. What will be the journal entry? This bills receivable was there, that he sent for collection. So he will write the journal entry as bill sent for collection, debtor to, this bill will be cancelled. Bills receivable. Okay, bills receivable. So bill sent for collection, debtor to bills receivable. That is the journal entry in the books of the drawer when he sent his bill for collection to the bank. Now for the drawing, what will be the journal entry? For him there is no need of writing journal entry because it is not a matter for him. For him there is no journal entry. Why there is no journal entry? Because whether the drawer sent the bill for collection or not, he has to pay the money. So on payment we know that what journal entry he will write. Bills payable debtor to cash or bank. Okay, so what the drawer will do, whoever gives him the bill on maturity, he has to pay the money to that person. It can be the drawer or any person appointed by the drawer. Okay, whoever brings that bill before him on maturity, he will make the payment. So the payment entry for him will always be, what will be the entry? Bills payable debtor to bank for drawing. So on sending the bill for collection, he need not write any journal entry because it is not a matter for him. Okay. Then let us see the fourth point. Let us see the fourth point. Here the bill is sent for collection. Now the bill is discounted with the bank. So the third case, when the bill is discounted with the banker. Banker means bank. He discounts the bill with the bank. In that case also the first journal entry has no change. The same journal entry will be written. Change will be there in the third journal entry only. So here we will make the change. What is the third journal entry? He is discounting the bill. So third we write on discounting the bill. What will be the journal entry on discounting the bill? So in the books of the drawer, what he will write? So we have told that 50,000 rupees, that example we have told, he discounted the bill for 50,000 rupees with the banker. So banker allowed him a discount. So 1 banker charged a discount of 1,000 rupees and remaining 49,000 rupees is given to the drawer. What will be the journal entry? So he will get the money and this bill will be cancelled. So we will write the journal entry as bank debtor. Bank debtor. Suppose if this is 50,000 rupees bill, how much he has got? 49,000 only he has got, and this bill is cancelled. Bills receivable is cancelled. What was the amount? 50,000 rupees. Suppose here it is 50,000 rupees, here 49,000 rupees. So 1,000 rupees difference. What it is? That is discount. Discount is an expense, so it can be debited. Discount debtor. Okay, that means bank debtor 49,000, discount debtor 1,000, and bills receivable 15,000. If the bill is for 50,000 rupees. So this is the journal entry: bank debtor, discount debtor to bills receivable. Then what will be the journal entry in drawings book? In drawings book, there is no need of journal entry. No journal entry. Why? Because he does not know, or he need not know that whether the bill is with the drawer or he discounted with the bank or sent for collection. Whatever happens, it will not be a matter for him, isn't it? He has to pay the money. That's all. So on maturity, what will be the journal entry? On maturity of the bill. On maturity of the bill, that means on the due date of the bill, on the day for payment of the bill. What will be the journal entry in the books of drawer? What will be the journal entry? No need of writing in the journal entry, because now the bill is with the banker. Banker will get the money, isn't it? Drawer already has received the money. He already got the money. So he need not write any journal entry. The money he will go to the banker only. Okay, so for drawer, no journal entry, isn't it? What will be the journal entry for drawing? As usual, what the journal entry? Bank bills payable debtor to bank. He will write the journal entry: bills payable debtor to bank. Bills payable debtor to bank. Now, who will present the bill to the drawing? Bank will give the bill to the bank will bring the bill to the drawing and collect the money from him, isn't it? So drawing will receive the bill. That means he has signed, and he will get collected back and pay the money to him. That's what happens. So the third case is over. Okay. So on maturity, drawer will not make any journal entry, but drawing will write the journal entry as usual: bills payable debtor to bank. That is his journal. Okay. So here he gives that money to the bank. So he can write either cash or bank, whatever it is. No issue. So now let us see the fourth case. So the fourth case, when the bill is endorsed to the creditor of the drawer or seller. That means we have told creditor sometimes he may have to pay some money to his creditor, or the seller may have to, or the drawer may have to pay some money to his creditor. At that time, whatever he received as the bill, that bill may be given to him, and his creditor, drawer's creditor, will go and collect the money from the drawer, isn't it? So what will be the journal entry in that case? So as we told, the first two journal entries are same. Okay. Then what will be the third journal entry? What is the third journal entry? The transaction is on endorsing the bill. That means on giving the bill to the creditor. What will be the journal entry? In the books of drawer, this bill received will be cancelled, and his old creditor amount also will be cancelled. So we will write creditor's debtor. Here creditor means drawer's creditor. Okay, suppose he is X, he is Y, then his creditor is Z. Then we will write Z debtor. Okay, so creditor debtor to bills receivable. This bills receivable is cancelled, and his old creditor was there, that amount also cancelled. That way creditor came in the debit. Then what will be the journal entry in the books of drawing? Yes, here also as usual, whether the bill is there with the drawer or bank or creditor, the drawee need not bother about that. So he will not write any journal entry. He will write here no journal entry. It does not mean that drawee will write in his book no journal entry. It means that he will not write any journal entry at that time. Okay. Then fourth point on maturity of the bill. On maturity of the bill. What it means on maturity of the bill means at the time when the money is to be paid. So at the time when the money is to be paid, to whom the drawee needs to pay the money? He needs to pay money to Z, who brings bill to him, isn't it? So drawee needs to pay money to that person. So what will be the journal entry here in the books of drawer? He need not write any journal entry because that bill already gone from him, isn't it? So no journal entry will be written here. No journal entry. But in the books of drawing, what journal entry will be written? He has to pay the money against his bills payable. So we will write that normal journal entry. Bills payable debtor to bank. Okay. Understood? So we have completed that those four cases. Here one thing you can make it clear that for drawing, in the books of drawing, whatever the drawer do with the bill, drawing has only these three journal entries. That means at the time of purchasing goods on credit, he will make the journal entry, and on accepting the bill, he will make the journal entry, and on payment of the bill, he will make the journal entry. So these three journal entries will not change in the books of drawing. It's easy. That means writing journal entries in the books of drawing is comparatively easier than writing journal entries in the books of drawer. Okay. So drawer also, here also much difference is not there. The first two cases are same. In the third case, when he sent the bill for collection, he will make the journal entry. Bill sent for collection debtor to bank. Isn't it? When he discount the bill with the bank, we will write bank debtor, discount debtor to bills received. Then in the fourth case, when he endorsed the bill to the creditor, we will write creditor debtor to bills received. So that's all. So simple things. Okay, so there is no need of confusion. These are the journal entries in four different cases. Now let us solve a question related to this. Okay. Question. The same question you can see in your NCERT book also. Question reads as here: Amit sold goods for rupees 20,000 to Sumit on credit on January 1st, 2020. On January 1st, 2020, Amit sold goods to Sumit on credit. So it's credit purchase and credit sales. Credit sales for Amit and credit purchase for Sumit. So Amit sold the goods on credit. So who will prepare the bill? Amit will prepare the bill and Sumit will accept it. That's what is happened. Amit drew a bill of exchange on Sumit for the same amount for 3 months. So here the sale amount is 20,000 and bill is drawn for the same amount for 3 months. Okay. Then Sumit accepted the bill on and matured to Amit. Sumit accepted the bill and that bill got matured and money is paid. That's what is given here. Sumit went to his acceptance on maturity. On maturity date, Sumit paid the money without any failure. So in that case, you have to record the journal entries in the 4 different cases. These are the 4 different cases we have discussed already. So first, Amit retained the bill. Second, Amit discounted the bill. Drawer discounted the bill. And third, Amit endorsed the bill to the creditor. And fourth case, Amit sent the bill for collection. These are the 4 different cases. Okay. So let us see how we will prepare the journal entries in these 4 different cases. Is it clear? Yes. So the first case, what is that? First case we are going to write. You can write the heading before writing the journal. You can write the heading. When Amit retained the bill till the date of maturity. When Amit retained the bill till the date of maturity. That is the case we are going to discuss. Point 1. So what will be the journal entry? First of all, which journal entry we have to write? For sales. Sales was on 2020 January 1. What will be the journal entry? In the books of drawer, we are writing journal entries in the books of drawer of Amit. So what will be the journal entry? Yes, we will write the journal entry. Sumit debtor to sales. Debtors debtor to sales. So we will write Sumit debtor 20,000 to sales 20,000 being sold goods on credit. Being sold goods on credit. First journal entry is on. Then what is the next journal entry? On accepting the bill or drawing the bill. Isn't it? On drawing the bill, what will be the journal entry? So here in the books of drawing, what will be the journal entry once? Sales or purchase. Drawing purchases the goods. So what the drawing will write? Purchases debtor to creditor. Purchases debtor to creditor means Amit. Purchases debtor to Amit. Then here on the same date, he has accepted the bill or drawn the bill. So we will write the journal entry. Bills receivable debtor for the same amount 20,000 to whom? Who has accepted? Sumit has accepted. To Sumit 20,000. Sometimes some amount will be paid in cash and the remaining will be accepted in the form of a bill. So in that case we will write cash debtor. Suppose 5,000 cash is given. Cash debtor 5,000. Then 15,000 is bills receivable. So bills receivable debtor 15,000 to Sumit, total 20,000. Okay. That means on the bills receivable drawn and accepted. Bills receivable drawn and accepted. So what will be the journal entry in the books of Sumit drawing? Yes, he will write Amit debtor to bills payable. Amit's debtor to bills payable 20,000 rupees. Then he retained the bill till maturity. So when is the maturity? See, January 1 it is drawn for 3 months. February 1, March 1 and April 1. 3 months. So April 1 is maturity and we have studied that if it is April 1 then 3 more days can be given, isn't it? So 3 more days can be given So it can be on April 4. Isn't it? April 1, January 1st, February 1st, February 1st, then March 1st, April 1st, plus 3 days. So April 4 it can be. Okay, so on April 4, then April 4 we will write maturity on, that means the bill is received, money is received. But we will write bank letter to, this will be cancelled, bill will be cancelled, bills receivable, being the money received on maturity. See, if it is given 3 months, if we are counting the day, other than day, month, if we are counting the day, since the February comes, one day will be extended here, it can be on April 5 also, if we count the day. Isn't it? Days in 3 months. So whatever it is, we can write April 4. So the journal entry is bank letter to bills receivable. What is the amount? 20,000. That means money received on maturity. Okay. Then what will be the journal entry in the books of Sumit? That is drawing. Yes. Bills payable debtor to bank or cash will be written. Here also we can write bank or cash. Okay. Now let us the second case. Let us discuss the second case. What is the second case? Amit discounted the bill at 12% per annum from his bank. So that is the second case. So here we are making changes. Here it is the second case. Second case also, we know that first two journal entries are same, isn't it? So we have to make the changes in the third journal entry. Amit discounted the bill at 12% per annum from his bank on the same date. So on the same date means on the day when the bill is drawn. So we can write the journal entry here on the same date. He has discounted the bill. So we have written the journal entry bank letter, discount letter to bills received. Isn't it? Let us write the same journal entry. Bank letter, that means bank account letter, then discount letter to bills receivable. So what will be the discount? Let us find that first. Total amount is 20,000. It is discounted for 12%. So 12 by 100 for 3 months. Isn't it? This bill is for 3 months. Here it is given 12% per annum. Per annum means per year. So we need for 3 months only. So 12% into 3 by 12. That means we will get 600 rupees. We have to pay. That is our loss. So total amount 20,000. Total amount is 20,000. Out of that 600 will need to be, that will be deducted by the bank and remaining will be given. Okay, the bank, so the bank will give 19,400 rupees. 19,400 rupees will be given by the bank. Okay, then, so that is at the case of discounting of bill. So we can write the journal entry. So the narration being the bill discounted at the rate of 12% per annum. Okay. So this is the case when the bill is discounted. So what journal entry will be written by the drawing at this time? Yes, of course there is no journal. And at the time when the drawee pay the amount, what will be the journal entry in the books of drawer? Yes, drawer will not write the journal entry because drawer already received the money. And what will be the journal entry in the books of drawing, Sumit? He will write the usual journal entry, but it is bills payable debtor to bank. Okay. Then let us discuss the third case. The bill is endorsed to the creditor. Okay, third case. So the third case, Amit endorsed the bill to his creditor Ankit. Okay, so he has given the bill to Ankit. When it is given, date is not given, so we can assume that it is given on the same date of drawing the bill. So we can write here January 1st, 2020, January 1st, the bill is given to Ankit. Isn't it? When it was given to bank, we have written bank debtor to bills receivable, bank debtor, discount debtor to bills receivable. Now when it is given to Ankit, we can write instead of bank, Ankit debtor to bills receivable. So Ankit debtor to bills receivable. Amount is 20,000. Journal entry being the bill endorsed to Ankit, a creditor. Bill is endorsed to Ankit, a creditor. He is the creditor of Amit. So what will be the journal entry at this time in the books of drawing? Yes, we know he did not write any journal entry because it is not a matter for him. And when the money is received, who will receive the money? Ankit will receive the money. So no need of writing journal entry in the books of drawer. But in the books of drawing, he has to pay money. So he will write, yes, the same journal entry, then bills payable debtor to bank. Okay, so that is the end of third case. Now let us discuss the fourth case. What is the fourth case? Says Amit sent the bank bill for collection on March 31st, and the bank informs that this money is received on April 5. Okay, so let us see that. Case in the books of drawer. This is the fourth case in the books of drawer. What is that case? The specialty is Amit sent the bill for collection when it is on March 31st, 2020. So 2020 March 31, he sent the bill for collection. What is the journal entry if he sends the bill for collection? Yes, a new asset comes, bill sent for collection, and the bill receivable will be cancelled. So we will write the journal entry, bill sent for collection, debtor to bills receivable. Okay, bill sent for collection, debtor to bills receivable. Amount 20,000. Yes. What will be the journal entry at this time in the books of Sumit? Drawing? Yes, no journal. Okay, so here narration being the bill sent for collection. Okay, then on April 5, 2020, the bank advice was received. Bank advice was received means bank informed that money was received. isn't it? So what will be the journal entry in the books of drawer? This entry we have not explained while explaining the journal entries. You can add this entry also there. So here we receive the journal money in our bank account, isn't it? So what will be the journal entry? Yes, money we receive in our bank account, we can write when it is on 2020 April 5. So money received in our bank account, so we can write bank letter to bill sent for collection. That means this asset is cancelled, bill sent for collection is cancelled, and money is credited to our bank account. So we will write, when the bank informs us that money is received, we will write bank account letter to bill sent for collection. This entry we have not written in the format of journal entries. This also you can add there. When the money is received, there we have discussed this as the third case, isn't it? Sorry, second case where bill is sent for collection. In that case, when the bill is getting matured, money will be received by the bank. In our account it will come, isn't it? So we can write bank letter to bill sent for collection. How much? 20,000 rupees. Okay. Then we can write the narration being bill met on maturity. Isn't it? The endorsed bill is matured on maturity. You can write being the endorsed bill. Endorsed bill matured on maturity or met on maturity. Okay. So what will be the journal entry in the books of Sumit at this time? Just same journal entry. What it is? Bill stable letter to bank. So these are the journal entries in all the four cases in the books of drawer. Now it is your turn to write the journal entries in the books of drawing like this for all the four cases. Okay, we have already discussed here which are the journal entries there. You can just revise that and prepare the journal entries in the books of drawing also. So that means in the books of Sumit you can prepare or you can draw the journal entries in all the four different cases. So I hope all of you understood this. This is very simple. So these are the basic journal entries and the problem related to basic aspects of bill of exchange. Next class we will be discussing some other concepts related to bill of exchange. I hope all of you understood this clearly. Okay, thank you.